Hey traders, in this video I want to talk to you about a problem that I know many of you will probably face, if not now then at some point in the not too distant future. And the issue with this particular challenge is it's not just something that is going to cause you to not make money or not be successful in the long run. It's going to affect you in the short term. It's going to impact all of your trading and all of your attempts to be successful. So not just the part where you finally find a strategy and you can put it to work in the markets, but actually it's going to impact your ability to even find a particular strategy. And what I'm talking about is being undercapitalized as a trader. And essentially that means you don't have enough money in your trading account to allow you to carry out your trading operations. Now that might just mean, from a mechanical perspective, getting into and out of trades because you don't have the right margin. And it also might be from a real world perspective in terms of you can't allocate the sort of time that you want to your trading because the profits that you're going to be generating from it, they simply aren't enough to supplement or sustain yourself whilst you're trading. Now, the good news is that there are a number of ways that you can overcome that. And at the end of this video, I will talk to you about some of the top ways that you can, overcome this issue of being undercapitalized as a trader, how you can get access to larger pools of liquidity. And like I said, the various different methods you can do that. So the great news is there is hope for everybody. If you master this skill of trading, then finding capital is actually really fairly easy. But we need to get over the issues that it's going to cause in the short term before you get to that in any case. Now, there are three primary ways that this is going to affect you. The first is you're going to be more aggressive with your trading. That means that you'll either be taking, risk sizes that are too big for your account. So instead of taking a 0.5% risk or 1% or 2%, you might bump that up to 3, 4, 5% risk per trade, which on the surface, it sounds like, well, actually, that's not too great. If I take 5% risk, and then I could still take 20 losing trades in a row, or 20 losing trades, and I'd still, just below 20 losing trades, and you'd still have your account. But the reality is that us as traders, we have capital, but we've got two different types of capital. We have monetary capital, so the money actually in your trading account, and then we've also got our mental capital. Now let's say, for example, you were to trade at 3% risk and you were to take 10 losing trades in a row. Well, you'd be 30% drawn down on your account, which isn't the worst thing in the world from a monetarily perspective. Okay, so from your monetary perspective, actually it's absolutely fine. You're 30% drawn down. You still got 70% of your trading funds available for you to be able to trade. However, mentally, looking at a 30% drawdown in your account, you'll find that actually it's probably going to affect you pretty badly. It's going to affect your ability to take the next trade or the next trade. It's going to affect the confidence that you have in your trading system or the confidence that you have in yourself. Whereas if you're taking those 10 losing trades in a row, even though not great, but with 1% risk or 0.5% risk, then you'd be looking at being 5 or 10% drawn down, which really isn't the end of the world, and it's something that you can recover from, relatively quickly, both from a monetary perspective and also from a mental perspective. The other thing that you might do with your aggressive trading is you might overtrade. So you might find that you're trying to make a certain dollar amount every day if you're day trading, or every month if you're swing trading. And what you're doing to get that particular dollar amount, that isn't based on a percentage, a realistic percentage of your account, which I say if you're looking to make 5, 10, maybe even 20% if you're aggressive on a monthly basis, that's something that's achievable. But you might put unrealistic expectations there. So let's say you've got $1,000 in an account and you want to make $1,000 a month, then you'll overtrade. You'll take trades that don't exist because you'll convince yourself that taking a greater volume of trades is somehow going to allow you to see profits more quickly. Now, obviously, the more trades you take, the more opportunity you give for your edge to play out, but only valid trades. Okay, you can't just take trades for the sake of taking them, and that's something that will end up happening if you don't have enough capital in your account to give you the sorts of profits that's going to make your trading operations worthwhile. Okay, so that's the other way that's going to cause you a problem. The second way that it's going to impact you is it will give you an inability to access and to utilize maybe more sophisticated risk and trade management framework. So one of the things that I teach my private trading clients is how to trade with a grid trading framework, which is a really, really effective way of trading the currency markets. When you look at the dynamics of the currency markets, ultimately it's a way that you put a grid around the areas that you're trading, and you trade a portfolio of trades in one particular currency pair. But the long and short of it is that you're able to make money even if you're wrong on the direction. So suddenly timing and direction isn't something that is a big issue. Yes, obviously you want to be right. It makes life easier, but actually you can make money even if you're wrong on the timing and you're wrong on the direction. But if you don't have enough money in your trading account, that's not something that you would be able to do. So it impacts the types of strategies that you will have access to. Now, finally, the way that this is going to impact you is emotionally. So, if you're over trading, if you're aggressively taking, 3, 4, 5% risk, things like that, if you can't utilize strategies that you'd like to utilize, it's going to impact your emotions. And we know as traders that it is a very emotional game, and the more emotional you are about the trades, typically the worse you're going to do. So the more that we can do to limit how trading affects our emotions, our psychology, the better it's going to be. And being undercapitalized is one of the things that really heightens your emotions as a trader, which really it takes you to a point where you aren't in a position to make good trading decisions. Every trading decision that you make is based on the way that you feel about the markets, the way that you need to make money on the next trade or the next trade or the next trade. You're kind of, you're forcing parameters there that don't need to be there, which is going to mean that you aren't successful in the long run. Now, the good news is that there are ways that you can get around this. Once you learn the skill of trading, right? This is something that I always say. You kind of need to separate your trading education process into two different phases. So one is learning the skill, the second is actually making money. Because once you learn the skill of trading, once you can prove to yourself that you can make on a modest, on a conservative account or on a demo account, once you can prove to yourself that you can make 5, 10, maybe 20% a month on average, and it's not going to be every month, but on average over the course of the year, if you can do even conservative numbers like 5 to 10% a month, then you will be able to access larger pools of liquidity. Either you can look at things like my brother and I did when we were younger. So we started out literally just out of university. So we didn't have a lot of funds of our own at the time, but fortunately we had access to family money. So we were able to trade family money. That's something that you could do. If you've got savings, then you can start to build your savings into your trading, not all at once. Okay, but you can take a portion of your savings, put that into your trading account, prove to yourself that it works, put a little bit more in, etc. You could look at, trading other people's money. Now, you need to be careful with regulation here to make sure that you do everything above board and legitimately. But you'll find that if you can make 5 to 10% return on capital on average on a monthly basis, people will they will find their way to invest in you. That's something that we found when we started our private investor fund, that actually raising capital isn't difficult. As long as you can prove that you've got a verifiable track record and you can make money, money will find its way to you. Now, fortunately, you don't need to do any of that today, because one of the things that you can do, one of the things that are available to you today that wasn't available to us, are these funded trader programs. So these funded accounts, these companies out there that will give you capital, sort of like a prop firm. They will let you trade their capital, and then they will give you a very, very generous split of the profits. In some cases, and with a company that I work with, they give you 90% of the profits that you make for their company. You make trading on their account. So if you imagine that you were to start off with, I don't know, a 100K account, okay, and you can graduate up and down. So you could start with a 10K account. You could, prove yourself with a 100K account and end up trading, $1 million. But if you're making 5 to 10% a month on a 100K account, that's £5,000 to £10,000 or dollars, depending on where you live. You start to move up to $500,000 or $1 million, you're looking at $50,000 to $100,000 a month from your trading operations, just trading very, very conservatively. So do you see, coming back towards the beginning of this video here, how I said that if you're undercapitalized, it's going to affect your ability to be successful in the long run. And that's a prime example there. In the beginning, if you're undercapitalized, you might be sat there trying to make 50, 100% a month, not realizing that if you could just make 5 to 10% a month conservatively, then you just get access to larger pools of liquidity. You pull the capital lever rather than the more trading, more trades, larger volume of trades and things like that. You just look at trading with larger amounts of money, and you'll be able to make a very, very good living from your trading. Now, in the next video, I'm going to talk to you about funded trader accounts, what they look like, what they are, why it's something that potentially you should consider if you want access to larger pools of capital. But here in this video, I just wanted to really take you through how it can affect you if you are undercapitalized as a trader, because it is really a very real issue. And I think it's probably one of the big ones when it comes to why traders fail, not just because they don't make enough money once they're actually live trading, but it stops them getting to that point because they approach their trading with, completely the wrong perspective and the wrong mindset. Now, if you don't have a trading strategy, if you'd like to work with me on a one-to-one basis or in some of my group coaching programs, please head over to my website. I'll post the link beneath this video here. Sign up for one of my master classes, and then we can work together, and I can get you to a point where you'll have access to these funded trader programs. You can pass their evaluations, and you can make some real money from your trading. Okay? Thank you so much for watching. If you haven't already done so, please subscribe to the channel, hit the bell so that you get a notification, and then I will look forward to speaking to you in the very next video. Take care now.